Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. He may not get back to you this week because he's going to be very, very busy. Stephen, good morning.
Oh, and after last week with the inflation data, this week is an absolute corker. It's so much fun.
It is a corker. Let's get onto that shortly. But the inflation data last week, what's it tell us about what's happening in the economy? And more importantly, what's going to happen tomorrow when the Reserve Bank board meets?
Yeah, look, the inflation number, in my interpretation, was a little bit lower than most people were expecting. And I know the focus has been on quarterly inflation because it is a pure a measure of inflation rather than the monthly numbers that the Bureau of Statistics now produce. The quarterly number did show that headline inflation slowed from 7.8% to 7%. So two things there. It's coming down, but it's still very elevated. But if we look at the monthly numbers, which have the advantage of not incorporating, the noise from the quarterly averages, if you like. So the March monthly number was only 6.3% in annual terms, down from 8.4% in December. So if we were to sort of extrapolate, and sorry for taking a long-winded approach to this, but if we extrapolate for what that implies for the June quarter, obviously we've only just got the March quarter numbers, but it suggests to me that we're going to be on track to get that headline figure down from 7% in the March quarter to something around about 6%. So we're dropping a good percentage point or thereabouts each quarter, and that's good news.
And we've still got the full impact of the rate rises we've seen so far to feed through.
Oh, definitely, yes. And recall that the RBA did hike in both February and March of this year, and they'll have clearly had no impact on the inflation data that we're seeing. That extra 50 basis points of rate hikes will show up. There's no doubt about that. It's just a question of, exactly when and exactly how much. And remember that it's also building on the prior rate hikes of 2022 when we saw 300 basis points. So there's a lot of monetary tightening in the system. It is starting to work. We're seeing that with the economy slowing down and inflation starting to tilt a little bit lower. But there's a lot of action still to come from this monetary policy tightening.
Okay, so surely the board can't lift rates this week, Stephen. Surely, he says, as a mortgage holder. Mind you, if I'm a pensioner, I'm probably delighted if we get another rate rise.
Indeed. Look, no, I think they're on hold, and certainly the market pricing is for a very low probability. It's just a little above 0% that we get a rate hike. Now, that can change, and the market is sometimes wrong. But I think, as we were just discussing with the inflation numbers, there was enough in them, and particularly what the RBA said at the April meeting when it also paused, that they're going to be sitting back watching the economic data come through. Now, that doesn't necessarily guarantee that we've seen the last rate hike in the cycle because, as we've seen in previous hiking cycles over the last 20 or 25 years, it is quite often, in fact, it's more common than not, that the RBA hikes, pauses a few months, reconsiders, and then they hike again, and that's been entirely appropriate. So for now, while the market's pricing in no change, and I think there's going to be no more change in interest rates probably for the rest of this calendar year. If there is a move, as they say in the classics, it's going to be up, not down. And we just need to see what happens to the run of economic news and indeed the next couple of monthly inflation numbers to be sort of sure that the momentum's back towards having inflation back at the target.
We'll also get a fair bit of information this week on what the Reserve Bank's thinking. We've got the Governor, Philip Lowe, speaking. We've got the statement on monetary policy out at the end of the week. We should have a pretty idea of what's going on this time next week, hopefully, or at least what the Reserve Bank thinks is going on.
Oh, yes, a lot of information. So the RBA Governor is giving a speech after the formal announcement on tomorrow night, it is, in fact, yes. So he's giving a speech to outline, probably flesh out the details of what the RBA is thinking and why they made that particular decision. And it's probably going to preempt, as you alluded to, the statement on monetary policy on Friday, which is the quarterly revamp, if you like, of the RBA's forecasts, a revamp of their analysis of the economy, what's actually happened from the February statement to the May statement, this will be. And it's going to be just sort of outlining, importantly from my perspective, what will probably be a downward revision to the inflation profile. Previously, they were expecting inflation to fall back to the target range by the middle of 2025, so still another couple of years away. My hunch, based on what we've seen on inflation and the growth in the economy, they'll bring that forward probably to the latter half of 2024, where inflation falls to the target. Such was that little bit of an undershoot on inflation and the downside risks to growth. So that's going to be absolutely vital to see what the RBA is doing, but also what it's saying and how it's analysing the economy.
Now, funny thing, Stephen, I was at a conference late last week. In fact, it was the Financial Review's Alpha Live conference. And for months, everyone has been criticising the Reserve Bank. Then we got the big review of the Reserve Bank. It was handed down. Everyone read it and thought, maybe we better rethink this, because I'm not sure that the alternate option put out there is any better than the current option. And what I did find interesting at this conference last week was there were a lot of people standing up saying, look, the Reserve Bank and Philip Lowe have done a great job. It's interesting how the sentiment is very pro-Reserve Bank at the moment.
It's an interesting call too, and the review was more important for procedural matters, not necessarily much else, because the 2 to 3% inflation target's there, and it sort of did mull over why they got it wrong. You know, the interest rate hiking forecast from 2024 or from 2021 that no hikes till 2024, and even prior to that when they undershot the inflation target for about 5 consecutive years. So in a sense, the things haven't changed, but to me the important issue, and this could have happened without a 267-page review, is having more experts on the board or a separate monetary policy board to make the interest rate decisions. Because the RBA did get it wrong. You know, they should have cut
no doubt.
in 2017, 18 or thereabouts, and they should have hiked late 21 or much earlier in 2022. So in a sense, it's a bit of a criticism that perhaps the composition of the board as it existed, or it exists to this day, wasn't the best for setting interest rates, but the 2 to 3 target is still a good one for the inflation rate. A bit more of an emphasis on the labour market, full employment, fair enough too. We'd like everybody to have a job. So, but at the end of the day, the changes aren't going to really materially alter the way that the RBA is going to conduct monetary policy.
Now, we're running out of time, but we've got a lot of data out this week. House prices, retail trade surpluses, all sorts of things. I mean, house prices is probably the big one for many of us. What do you think April will have shown?
Going up. We know from the high-frequency daily data from CoreLogic, we're going to have an increase month on month for the month of April of about 0.6 or 0.7%. Sydney leading the way, up over 1% in the month and 3% over the last 2.5 months. So you'll see a lot of stories later today, it comes out later today, on house prices increasing again.
And job ads.
Critical issue for the labour market, tilting down. I think we've got more evidence that both immigration and the slowing economy are going to be seeing job ads tilt low. Similar story with retail trade. We consumers are responding to cost of living pressures, tightness in terms of interest rate hikes. So retail sales will probably be another weak result. But the good news will be on the international trade front again, another whopping surplus coming through, somewhere around that 13 or 14 billion per month, with good old iron ore, natural gas, coal being the big drivers of our export earnings, and imports, muddling along. The domestic economy is slowing, so we're not importing quite as much as we used to.
Well, enjoy this very, very busy week, Stephen.
I will. I can't wait for it to kick off.
That was economist Stephen Koukoulas, better known as The Kouk, Thekouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.